Cryptotrader is proudly brought to you by Element, a full-service investment bank for the digital token capital markets.
Welcome to this week's edition of Cryptotrader, the world's first televised cryptocurrency investment show. After last week, where we had both Richard Branson and Mike Novogratz on our show, I think I can confidently say that not only are we the first cryptocurrency investment show, but we're probably now the biggest cryptocurrency investment show in the world. Another week on crypto and another hack, or another alleged hack. This time it was Tether, who were compromised for over $30 million. For those of you who don't know what Tether is almost like a way of getting fiat or normal currency into the blockchain ecosystem or into the crypto ecosystem. And when you buy a Tether, when you give Tether $1, they issue you with a Tether, which is basically valued and backed by $1. So theoretically, the currency will always remain at $1 and will always be backed by $1. Now they got hacked. They published an announcement on their website that they're doing a kind of hard fork where they're issuing a software update which will effectively eliminate the use of the wallet that has the compromised tokens on it. Sounds a little bit fishy to me. And I'm not the only one. I've been getting tweets from a guy called Bitfinex who's asked to remain anonymous. And obviously we're going to respect that. And he's got some pretty serious allegations around Bitfinex and Tether. Bitfinex, welcome to our show. We are going to keep you anonymous as you requested. What is your big allegation against Bitfinex and Tether?
What happened with Bitfinex is, they lost banking earlier this year, back in March. They didn't really tell their customers right away that, hey, we lost banking. They kind of try to shuffle it under the rug. Bitfinex, and Tether, they're basically the same company. And for some reason, ever since April, they've basically been telling people that, at least until I found a recording saying to the contrary, that Tether is not Bitfinex. Even one of the, I believe a shareholder in Bitfinex asked him, hey, is Tether Bitfinex? And Phil Potter, he basically said, no, Tether's not Bitfinex. We just bank at the same banks.
So you're saying that they either partnered up with or created this new cryptocurrency called Tether, which you claim that they own, and you claim that people can now use Tether to put US dollars onto Bitfinex where they can use it to then trade crypto. Is that what you're saying?
Yeah, but the whole premise of Tether being backed by a US dollar is ridiculous, because the first thing you go to when you go to their website, you look at the terms of service, it says right there that Tethers are not backed by US dollars. It says, a Tether is not redeemable for money from us for any reason at all.
If you ask me, it sounds to me like that's a really clever way of getting money into the blockchain or into cryptocurrencies without all the necessary KYC, or with the reduced KYC, and not the big headache of putting money onto exchanges. It almost sounds genius to me. What's wrong with that?
Well, they claim that the tokens are backed by US dollars, but they're not. So the tokens have no value. The product is fraudulent. It's not. And literally, it's like the most blatant thing that I show people. I have a screenshot of the Tether website, and it shows 1-to-1 or 100% backed by US dollars in a reserve. And then I have right under it the legal clause, which basically says, no, they're not backed for money. It's not money. It's not currency. It's completely worthless. It's a car-wash token.
Bitfinex, are you saying that currently you can't redeem a Tether for a US dollar?
No, legally they're not redeemable. Now, they certainly can choose to redeem them. And for their insiders and their friends, they most likely redeem them. But Tethers on a large scale have not been redeemed.
So what you're saying is that when I deposit money into Tether, they don't actually have a bank account, and what I'm doing is I'm putting that money into an attorney trust account. That can't be legal.
I believe so, yes, based on what I saw in the last report that they have, where they're because it shows that their bank account, it shows for the benefit of Tether Limited. So that's going to be a trust.
Okay, so I understand how Tether works, or I think I understand how Tether works. You take your fiat currency, instead of depositing it into an exchange, what you do is you deposit it into Tether, you buy Tether, each Tether is valued at $1 and you transfer that onto an exchange. What's wrong with that?
Well, in my opinion, it's they're most likely engaging in a form of money laundering in order to get money into their exchange. I have audio from Phil Potter basically admitting that, hey, yeah, whenever we lost a bank account, we would create a new bank account and under a new corporate entity, and we'd resume our banking. And they kept cycling. They're playing. He admitted that he was playing cat and mouse tricks with banks in order to try to keep banking up. So ever since then, the only thing that they can use is going to be Tether. And either attorney trust accounts, or they're most likely doing more than one thing. They could be using a form of halal. There's a lot of little tricks that I imagine that Phil Potter is doing in order to try to keep money flowing through the exchange.
What is this going to do to the Bitcoin price?
They have to keep the price of Bitcoin skyrocketing in order to keep money going into the exchange. Because if they're using halal, the only way they can pay out a withdrawal is if they have somebody else that wants to deposit.
So what you're saying is that if people run on the exchanges, or if the Bitcoin price goes down, people will want to withdraw their money. And then what you're saying is that you believe that the Tether are not backed by actual US dollars and that Bitfinex won't be able to honor this. Am I getting you right?
If you accept for a second that, okay, what Tether is doing is legal, and let's say the government doesn't actually step in and they don't interfere with Tether. Legally, Tether can decide, you know what, we have $600 million. It says in our agreement that these tokens are not redeemable for anything. See you later. They could legally run away with all the money.
Certainly some very harsh allegations if they are correct. If Bitfinex do indeed own Tether, they're almost the exchange and the central bank, and they could, if they wanted to, manipulate the amount of currency in circulation to defend their own position. And that's quite a harsh allegation. In the interests of fair journalism, we reached out to Bitfinex both on email and on Twitter, and to date we've had no response. So I'm leaving an open invitation to Bitfinex or Tether. If you want to get onto our show and you want to defend your position, this seat next to me is open. After the response we had the last time when we had Simon Dingle in the studio, I decided to get him back. Simon, thanks for coming back to our studio.
Anytime.
Bitcoin, Bitcoin, Bitcoin. It's all the rage right now.
Yeah.
It's going to over $8,000. What's causing this?
At the same things as always, a lot of hype, unfortunately, or fortunately. But I think also a growing appreciation that Bitcoin really is the headline in the blockchain story. I think for too long it was very fashionable for people to say, I'm all in on blockchain, but this Bitcoin thing I'm not sure about, which is a little bit like saying, this email thing, I don't know about that, but TCP/IP is going to be massive. Isn't an incorrect statement, but I think it misses a very important narrative. And I think more and more people are waking up to the fact that actually this is a story about Bitcoin and blockchain is just a component of it.
Now, I know you're not a day-to-day trader and you don't look at the small bumps.
I like having a face, Ran. I don't like it when it gets ripped off.
So you're not a day-to-day trader, but surely at $8,500 US, Bitcoin has had a bit of a run. I mean, it never slows down.
It doesn't, and it kind of sawtooths its way up. I think I said to you last time, I'm a technologist first and an investor second. So I'm less interested in price movement and more interested in the movement of society and what we're doing with this breakthrough idea. But it is interesting watching the price, and it's interesting watching people react to the price. For example, a lot of people have been tweeting about the fact that Bitcoin is somewhere within 10% of Apple's market cap, for example, which is like saying the market cap of Bitcoin is about the same as the milliliters in a glass of wine. It's not a relevant comparison. Bitcoin's not a company. It's interesting when you look at value. But for me, what's more interesting is when we start thinking about Bitcoin as a percentage of global monetary supply. Let's have that discussion, right? Which is $65 trillion.
It's tiny.
It's to say it's tiny it literally is a drop in the ocean. So if we think Bitcoin's going to be even halfway successful in doing what Satoshi intended for it to do, then you have to think it's going to occupy at least a tiny percentage of global monetary supply, in which case another 10x, even another 100x isn't implausible. Are we going to have dips before we get there? Yes. Do I care? No.
Okay, so you spoke about Satoshi and you spoke about money supply, and those are quite controversial views.
Yes.
Because when I called you to come to the studio and Bitcoin Cash was having its day,
yeah,
you said to me by the time you get to the studio, Bitcoin Cash would have crashed. Now,
it did announce back a little bit. Yeah.
Well, I mean, it's still doubled. It's still tripled. It's
interesting as well watching the reactions and the discussion around Satoshi's vision as if everybody's now an expert. Satoshi's vision is pretty clear, and anybody can go and read it. Go to bitcoin.org. The white paper is there. Nobody's edited it. Satoshi's vision was for peer-to-peer digital cash. And importantly, and this is something that the industry doesn't like talking about, in a distributed network, not a decentralized network. You know, if you did info science at Varsity, you know that there's a big difference between star networks, decentralized networks, and distributed networks. So we lost Satoshi's vision in terms of network topology 5 years ago at least. You know, we're in the store of value stage with Bitcoin. Bitcoin now resembles more of an intangible asset, something like gold on the internet, than it does a currency. You know, so that wasn't Satoshi's vision either. I'm sure that he thought we would have to go through this phase before we got to the cash stage. So when somebody says to me that they're following Satoshi's vision, I take it with a big pinch of salt. When Roger Ver says it, I hear him. I appreciate what he's done for the industry. But this isn't something that I'm directing at Roger himself. So please don't get me wrong. I think there are a lot of people in the industry who are guilty of this, but egos are getting in the way, Ran. And when we look at whether it's Bitcoin Cash or Bitcoin Gold, or all of the deliberation about Satoshi's vision, when you cut through all the BS, what these guys are really talking about is the fact that they don't own something. They aren't relevant. They can't be rock stars in an open network, right? Nobody owns this thing. We're doing this together. We're all Satoshi. And unfortunately, a lot of the discussion around Bitcoin Cash has been led by individuals who have become irrelevant. They don't get retweeted as much as they used to. Nobody gives a shit about their Medium articles. Sorry, I don't know if I'm allowed to say that on there.
You just did.
But you know what I mean. And one has to try and kind of set aside all of the discussions, which are really discussions about egos, and look at what we're really trying to succeed. Now, do I think that Roger has Satoshi's vision at heart? Yes, I do. I think he believes he's doing the right thing. Is cash in its current form closer to a peer-to-peer digital cash than Bitcoin is? Undoubtedly. Fees are lower, etc. But let's talk about distribution and decentralization, because it's nowhere near being as close to distributed as Bitcoin is. There's too much control around Roger and his cronies, and there's too much name hijacking. You know, Charlie could have launched Litecoin as Bitcoin Lite and confused everybody with the name. He forked Bitcoin and he didn't do that. I honestly think Bitcoin Cash should have stood on its own 2 feet as an altcoin, not try to hijack the name. I mean, Roger owns Bitcoin.com. He has a big stick at his disposal. Fortunately, until now, he's been quite responsible with that stick. But I all think we could be a little bit more honest about our intentions.
So yes, I'm a big fan of Bitcoin, and I'm a big fan of Bitcoin Cash. And like you, I think I'm a big fan of chain splits, because I think chain splits are good because they encourage progression. What I don't like, though, is when they say that Bitcoin Cash is the real Bitcoin. Because if it was the real Bitcoin, it would have the Bitcoin name. Now, Roger said that to him, Bitcoin Cash is actually the real Bitcoin. Listen to this.
Okay.
From my point of view, Bitcoin Cash is the real Bitcoin. And so Bitcoin Cash is on the same roadmap that the original Bitcoin from day one was. And then just within the last year, a bunch of people managed to veer it off and intentionally make the SegWit version of Bitcoin. And they've intentionally made it have high fees. They've intentionally made it have long confirmation times. They've intentionally made it less useful in business. And Bitcoin Cash is still useful in business, has low fees, fast confirmation times. It just doesn't have as much infrastructure built up on it. But I'm really, really bullish on Bitcoin Cash. And I've been selling a portion of my SegWit Bitcoins for more Bitcoin Cash. I think it seems really clear that the vast majority of people that are actually using Bitcoin in commerce prefer Bitcoin Cash to Bitcoin SegWit. The vast majority of people whose background is in business or in economics prefer Bitcoin Cash to Bitcoin SegWit, and I fall squarely in that camp. I can't count how many Bitcoin transactions I do both myself personally and for my company every single day, and Bitcoin Cash is much more useful for that than Bitcoin SegWit at this point.
Richard, what's the big news on Bitcoin?
All of our dreams have finally come true. The largest derivatives market, the largest market on the entire planet, is listing Bitcoin futures, and they start testing in 2 days. Well, maybe 1 day now, and they launch the second week of December. And this isn't like the Ledger X launch where you have to sign up new customers and onboard them. This is the same interface that people trade billions and billions and billions of dollars of commodities. They're going to have an option to trade Bitcoin. So all that liquidity that a currency needs to outcompete other currencies is finally going to show up, and it's going to make the price go to the moon.
What an amazing intro. Explain to me what that would do to the Bitcoin price, or why that would make the Bitcoin price run.
So just recently, a person that runs a brokerage took out a full-page article in the New York Times warning that Bitcoin futures shouldn't be listed because it would endanger the entire economy of the United States. And his logic was that just as Bitcoin has gone from 700 to 7,000, so too could it easily go from 7,000 to 70,000, in which case the market would always be locked up, and the shorts that were silly enough to short the biggest bull market that mankind has ever seen would never be able to cover, and they would all go bankrupt. So I don't know about you, but if the owner of one of the largest brokerages in the world is afraid that Bitcoin might go from 7,000 to 70,000 before people can close their shorts, that's really good news for a speculator. Now, the mechanics of how the futures price will affect the spot price is called cash and carry arbitrage, or just cash and carry trading. It's where you see the futures is trading at $10,000 a coin, but the local spot price is trading at only $8,500. Therefore, there's a $1,500 difference that you can instantly lock in by buying the future and selling the spot, or rather selling the future and buying the spot. This drives down the price of the future, and this drives up the price of the spot.
So what these futures are actually doing, if I understand this correctly, is number one, they're giving a platform for institutional investors to enter the market, where previously institutional investors haven't had an opportunity. But the other thing they're doing is that they're giving a platform to people who want to speculate on the price of Bitcoin in the future. So if the price today is, say, $8,500, you can speculate by pinning a price in the future of, say, $10,000. And if Bitcoin gets to $10,000, then you get $10,000, but you don't enjoy any more of the upside. Is that right?
You will be locking in your profit of $1,500 short term. However, you will be losing out on any profit if the price goes over 10,000, which it should. So if you thought Bitcoin went up really fast and really hard when no one has it in their wallet and you can't buy that much with it, what happens when Square Cash lets everyone buy it with their credit cards nearly instantly? What happens when more retail and user adoption occurs? What happens when Tier 2 rolls out and we have nearly instant and free transactions that are backed by and secured by real digital gold on the most secure network with the most hash power and the best developers? That only drives the price up. So we're at the beginning of an S-curve, and you have the once-in-a-lifetime, very rare chance to get in before Wall Street does. So the early adopters, us, speculators, miners, investors, we got in before Wall Street did. And now Wall Street's going to get in with their futures before Main Street. So the futures will allow an ETF, and the ETF will let Joe, normal guy, invest his IRA in it. So we got in before Wall Street gets in before Main Street, we take over the world.
What you're saying is that now institutions who previously haven't been able to buy Bitcoin or cryptocurrencies have almost like an entry point that they can actually buy into the cryptocurrency market while keeping their investment mandate, right?
Many institutions have been barred from purchasing Bitcoin due to partnership agreements where the limited partners are not allowed to invest in certain categories of assets. So a hedge fund manager could take his personal money and buy Bitcoin, but he wouldn't be allowed to just purchase some, random, he couldn't invest in his brother's restaurant. It's against the terms of the investment vehicle. And if there wasn't a way for an institution to have guaranteed and insured the thing they're buying, they wouldn't be allowed to buy it. So just recently, Coinbase and very shortly Gemini rolled out institutional level storage agreements where it's bonded, insured, and you pay a fee for them to make sure that it's safe. That plus CME futures will allow many institutional players that were barred by their partnership agreements from investing to invest, and it will allow for ETFs because the ETF can buy the future, and then you can buy it just like any other stock in your normal stock trading interface. It's all about the user onboarding. So just because people can buy something, unless it's easy, they won't. And this solves the ease of entry problem for billions and billions and billions of dollars.
So it also creates an unprecedented demand for Bitcoin, a demand for Bitcoin that we've never ever seen before.
If every millionaire in the world wanted a single Bitcoin, they couldn't have one. Because there will only be 21 million ever. Only about 16 million have been mined. Of those 16 million, Satoshi's got 1 million. I think he's deceased. I don't think his coins will ever be moved. They never have been. That leaves you with 15. Of those 15, probably another million was lost back when these things weren't worth anything. Now you're down to about 14. And there's this measurement called days destroyed, which shows how long it's been since a Bitcoin has been moved. And if you look at the days destroyed, the actual number of Bitcoins that are available and traded and moved around in the free market, it's about 5 million coins. So there's a whole lot of money fighting over 5 million coins. The price is going to go, in my estimate, as long as Wall Street gets in, to $20,000 by Christmas.
There's a little company in Perth, Australia that ran Australia's first ICO. You may remember that a while back we interviewed the guys from Power Ledger on the line. And specifically we interviewed Dr. Gemma Green. I found out later that Dr. Gemma Green is also the acting Lord Mayor of Perth. Now if you've been following the story, Power Ledger recently did their ICO and they opened at 2x the price of the ICO, and today they're trading at about 7x the price of an ICO. And that's in a very, very, very tough ICO market. Dr. Gemma Green, welcome to our show again. Such an honor to have you here. For those guys who never watched the first show, just remind us again, what does Power Ledger actually do?
So we have a technology platform that enables peer-to-peer trading of electricity and also fractionalized ownership of renewable energy assets using the blockchain as the asset and income register. And
you guys were the first ICO from Australia, right?
That's correct. We're the first ICO in Australia, and we're also the first ICO in the energy markets globally.
You launched your token in a very humble ICO. It was one of those ICOs where it was a bunch of people in Perth, Australia, doing hard work, very little hype. And when you launched your ICO opened at 2x, and it's trading today at about 7x. Why do you think this happened in a very suppressed ICO market?
Well, in our view, Power Ledger, is a company that, represents value in that we've got a platform, application, and projects. We're not just a concept and some vaporware. And I hope, at least, that the market can see that, and that's why they are supporting us.
So, Gemma, the big question, your current market cap or token market cap is above $200 million US. In your wildest dreams, did you ever think that you guys would get to $200 million US?
Not at all. I mean, we're a little company based out of Perth, and we knew we had an idea that we thought was really exciting and potentially world-changing. But, we're obviously over the moon that the rest of the world thinks the same.
I'm sure we've all got those crypto stories that we don't really tell anyone, those like crypto regrets. Our next guest is all the way from Israel. His name is Yoni Assia, and he's the CEO of a social trading platform called eToro. And he's got an unbelievable story. Yoni, welcome all the way from Tel Aviv in Israel. Yoni, before we talk about the story, which I do want you to tell everyone about, just tell us a little bit about eToro and what eToro actually does.
So eToro today is the world's largest social trading network, where we have over 7 million users from more than 100 countries who trade on our global brokerage stocks, commodities, indices, currencies, and of course, cryptocurrencies. And everybody in the network automatically shares their trading portfolio and their trading performance. So every trader on our network can actually see the top traders, follow them, and automatically copy top traders in the network. So if you see somebody who generated 50% returns in the past year, you say, I want to copy him with $5,000, it automatically copies his entire portfolio into your portfolio and then trades every trade he does automatically at the same time and the same price in your account. So if you find somebody great, you can make 50% a year copy.
So Yoni, if I go to your site and I find a trader that's got like crazy returns, like 2,000–3,000% returns, and I want to follow him and I want my portfolio to look like his portfolio, what does that cost me? Does it cost me anything?
So the portfolio management part of eToro is free, so it doesn't cost anything to copy a trader. But when you copy someone, it actually trades in your account. So every time he trades, it trades in your account. And of course, there's a small fee, the spread on every trade. So you basically pay those trading commissions on eToro.
Yoni, you must be one of the first or one of the only platforms to integrate stocks, commodities, crypto all on one platform. What's the logic behind of including them all on one platform, and how's that going down with the crypto community?
So eToro today is simplifying the access to the global markets in more than 100 countries. And the idea is we believe that people should have a diversified portfolio across global asset classes of equities, commodities, currencies, and cryptocurrencies. We're huge fans of cryptocurrencies. I've been personally involved in the space since 2010. And obviously, you can actually see my portfolio, so it's public like everybody else on eToro. So you can see I'm heavily invested in cryptocurrencies, but we still believe it's super important as this new generation of traders and investors are learning about the markets to diversify their holdings. And eToro now is one of the very few places in the world which enables you to trade both stocks and cryptos in the same platform, and probably one of the easiest and simplest ways to invest in cryptocurrencies.
Look, it sounds to me like we're going to have to create like a CNBC crypto trader competition with eToro, where our viewers can start these portfolios on your platform, and we can monitor and we can see who the best crypto traders really are. But Johnny, that's not why I called you on the show. I called you on the show because you told me one of your amazing crypto stories. Tell our viewers the story, or your crypto story.
Well, so when we started eToro, when we started looking at the blockchain in 2010, I was immediately infatuated with the technology. I truly believe the blockchain technology is the equivalent of electricity of our generation. And we started working on a project called Colored Coins because I looked at the blockchain, the Bitcoin blockchain, and we wanted to use it for more assets. We wanted to issue different assets, financial assets that we trade on eToro on top of that, on top of the Bitcoin blockchain. And we started the project, and I started paying with Bitcoin different programmers over the web. And one specific interesting programmer approached us to help contribute to the Colored Coins project, and his name was Vitalik Buterin. And he sent me an email asking whether he could help us, and I basically offered him to write together with me the Colored Coins white paper. And when he came to Israel, he sat in our offices, he did an amazing work on the white paper, and then he came to a conclusion that the Bitcoin blockchain isn't good enough for what we want to do. He wanted to build his own blockchain. And I basically thought that was too difficult to build a new blockchain. Obviously, Vitalik built his own blockchain, Ethereum. He sent me the Ethereum white paper way before I think anybody else saw it. And actually, Colored Coins and I am quoted and referenced in the Ethereum white paper. But unfortunately, I thought back then Ethereum was way ahead of its time, and I did the grave mistake of not investing enough in the ICO.
Well, that's another Power Pack crypto show under our belt. Next week, we're going to be traveling again. Yes, we're going to New York, where we're going to be broadcasting to you live from the Consensus Invest in New York City. If you want live updates, you can follow me on Twitter at Cryptoman Ran. And if you have any crypto questions that you need answered, again, my Twitter is at Cryptoman Ran. Until next week, happy trading.
Cryptotrader is proudly brought to you by Element, a full-service investment bank for the digital token capital markets.
If you want more of this content, click the subscribe button now.